So welcome to today's class. Just as I had mentioned earlier, we will be together for the next 1 year. You might think it's a long time, but it's not. It's a very short time. It's a very short time to learn a skill. That's gonna change the trajectory of your life. So, and in my experience is with this kind of psychological businesses, it's very, very hard to tell someone that I'm gonna teach you for an year and they actually trust that you're going to teach them for an year. Because what is being circulated out there is, let me teach you Forex 1 week, 2 weeks, 3 months, and so on and so forth. But people don't like committing to time. I don't think in my experience I have found any mentor who can actually stay with a student for a whole year, apart from myself, because I have done it severally. Because in my experience, people who have actually taught me were teaching me 3 days. I used to pay $300 for 3 days, Friday, Saturday, Sunday. I used to pay quite a lot of money for just a few days of being, trying to learn a skill. Then I think I was quite foolish then, or I was gluttonous or greedy because I was thinking that I can master Forex in a span of 3 days, where somebody just hops in and teaches you a certain strategy, maybe trend line or some type of weird strategy or some indicators. And I believe that I could do it within the shortest time possible. But shock on me, 3 years just passed by. And I realized that Forex trading is not any type of business that very many people think it is. This is a skill just like athletics, football, or any other skill that you need to flex your muscles. Because you will have to learn what you are going to expect in the market. You need to learn what Forex is all about. So the foundation is very, very important. I remember when I was starting, the first thing I did was jumping into charts. And I think it's the same experience that I sense you have started with. Okay?
Yeah. This meeting is being recorded.
Where the first introduction that someone told you about Forex is just put some money in your account, jump in the account, and then voila, you make some money, and there's potential to make some money. I don't differ with any of those gurus or whoever wants to let somebody in trading that way, because that is how most of us are introduced, myself included. That's how I was introduced into Forex. But I came to realize it is so detrimental because Forex is sold as a get-rich-quick scheme, which it isn't. Okay? It's a business where you manage risk, and it's a business where everything you do counts, from the way you wake up, from the way you handle your everyday activities, from your punctuality, from your commitments. It will reflect on the charts and in your P&L. So the first thing I wanted us to do before I even start our lesson on what is Forex, I wanted us just to go through our list of what are you expecting me to deliver to you. And I had sent you this course outline, which will run from today, June 10th, to next year, June 10th, 2025. Now, how I structure my teaching is I will introduce you to the financial markets. Why I do this is because many tutors or Forex trainers out there don't like teaching this bit of trading. Why, in my opinion, why don't they do that? Number one, it's a very, very boring area of study because everyone wants to jump right into the charts. They want to see the candlestick, they want to see the trends, they want to do all that when the foundation is not yet set. So the reason why I like starting, because I will classify you now as Ayana in the novice stage, okay? Ayana is somebody who is anticipating or who wants to grasp a certain skill. They want. They have heard good things about it and they want it, okay? So in this perspective that I am going to take you through, I will teach you the introduction to financial markets. We will go through the charting platforms, TradingView, MT4, MT5, CTrader, DXTrade. We are not going to delve deeper into so many of them, but I will mention them and show you examples where relevant, so that when you see it online, it doesn't become a shiny object to you and you might want to jump into it. This will help refrain you from seeing as if another trader is doing something unique than what you are doing, because I will make you informed of all that. The other thing, we are going to see a trader's life cycle. Life of a trader, I will tell you the must-have tools and things to avoid. We're going to go through the type of charts that we have. There are so many charts, but the common ones that are known are the Japanese candlestick, the bar charts, the line charts, the Renko charts, and other price action charts that I will show you upon request or if required. But I don't think that you will require anything other than this. How to analyze the markets. We are going to look at the technical side and the fundamental side, where we are going to look at news applications, where we check out the news and all that. I had previously given you an orientation class where I mentioned some of these things. Now, another thing that we are going to know, and which is very important, is how to draw support and resistance lines or zones, trend lines, chart channels, patterns accurately, where and how to use them for high probability analysis. I personally don't use them. I stopped using them a while back. But I think, and in my experience, they are very good fundamentally and technically to know how to plot on your charts, because they are the basis of where market bounces off. And other things, as we are going to see in the course, we are going to see how support and resistance, we are going to carry this term into other things like order blocks and breaker blocks later in the course, and market structure and how all this intertwine with it. I'm going to teach you position sizing and risk management. I'm going to show you the calculator apps that are paid and others for free, others are online, and which assets cannot be calculated with the apps and why. We're going to go through the brokers and the prop firms. The other thing I'm going to teach you is mindset and psychology of a winning trader. And I'm also going to recommend a book, and I will send you the PDF copy, and I will send you the audio book or the link to the audio book of the Trading in the Zone by Mark Douglas. It will help you.
I'm reading that book already.
You're reading that book?
2, yeah.
Yeah.
So, yeah, thanks.
Okay, that's commendable. That's commendable. It's a very good book. I have read it a couple of times. It really helps to understand the psychology of the market. There are other trading psychology books, which I will recommend later on, but that's beside the point. We are here to learn it straight from somebody who is trading, and I've gone through all those processes and reading the books, and I can give you some summaries. And if you have questions, you can also ask in regards to such books. We're going to look at funded accounts and classical tips. We're going to review the first part as we move on. So this will be the Yana. Most likely this will be taught in the first month, all of it in the first month. Then we are going to go to the second month, where we are going to learn the intermediate section, where you'll be now the learner stage. You'll have already deciphered most of the Forex jargon, so that when we go to the next part of our learning, and I use any jargon or lingo from this part, or lines like support and resistance, you're not lost where you are. That's why I've structured it that way. We'll have intermediate, which is learner. Where you're going to learn this, we're going to learn in the second month. This is in the month of July, July to August. Yes, we are going to learn the psychology of the market trend. I'm going to teach you market structure. I'm going to teach you market nature, trend trading, and trends within trends, main trend versus counter trend. I will teach you break of structure versus break of trend. I will teach you behavior of currency pairs. We are going to look at indices. We are going to look at stocks. We are going to look at commodities. We are going to look at crypto and other assets which are traded in the market. We have futures. We also have the most popular ones like they call them indexes or synthetic indices, commonly known, which I don't trade. I have interacted with them, but I don't trade them. And I don't even teach them, even if I am aware of them, because they are just a type of a game. They're not representing what the market actually has. We have psychological price levels, round numbers to be precise. I will teach you how markets normally reverse and react around them, where we're going to learn about price reaction. What are you expecting the market to do, or how are you expecting the market to react on those levels and other levels? We're also going to learn scalping, intraday versus swing trades. What is a scalper? What is an intraday trader? Who is a swing trader? There are other types of traders like position size trading, which I'm just going to mention briefly, but we are not going to delve deeper into them unless someone wants to invest huge amounts of money, like people like Warren Buffett, who speculate the market long term in a fashion of investing in good companies. Those are what are called position size traders. Confirmation versus non-confirmation trades. We're going to look at entry criteria and target. We're also going to look at fundamentals versus price action. What is fundamentals, news, and all that, and how is it related to price action and vice versa? We're going to look at time frame correlation, currency pair correlation. We are going to look at the topic of top-down analysis. Top-down analysis is quite a deep topic, which you're going to go through, because here we are going to learn the fractal nature of the market and how we start from the higher time frame, what they mean, up to the lowest time frame, how high can you go, how low can you go, etc. I'm going to also teach you backtesting the right way. We use two, currently, there are two available softwares to be used for backtesting. Either you subscribe to TradingView, which is a paid version, or you buy Soft4FX, which uses MT4, MT5, and you only pay one off, I think 100 USD, and then they give you their software where you can backtest, and it is updated regularly. Planning trades, trading plan, and journaling. We're going to go through that. We're going to look at high probability and low probability trades, high risk, high and low risk trades. Then you're going to review after that. Then the third month, we're going to look at the advanced or elite earner. Once I have assessed and I have seen that you are able to project and you can be able to put this into practice in the market, I am now going to, we're now going to look at these four elements. But the top three that I will teach are the supply and demand trading, the smart money logic, and I'm going to look at smart money traps. Because for every good thing in the market, there is how it can be used against you. So whatever I'm going to teach you here, I'm going to now teach you how banks look at what we have learned and how you can avoid being stopped out in the market when you are already right. As for the order flow elements of trading, these are just indicators which are added on the market to confirm what you are trading above here and levels that are high probability. These order flow elements are they are bought separately because they are subscription, because they are live-based market. I'm going to show you when we get here how they are used practically on my charts. The one thing that I'm going to remind you is the Forex market is a device to transfer money from the impatient to the patient. So why I'm saying this is because when we are learning, I want you to be so open-minded. Don't have the urgency to gratify the need to actually know the market on one day. There's a reason why I'm going to teach you all that theory that I have mentioned there within the first 3 months. Then after that, we are going to put it into practice another 3 months. Then after that, I'm gonna guide you along as you start getting grip on the market another 3 months. Then we are gonna start challenges from funded accounts, where now you can buy accounts and pass them and start making money from them. By the time you're through with 1 year, at least I am aware that you will be way ahead. And I will know by the time we are parting ways if we are going to, but I know we are going to partner more, because most of the students who I have taught, we have ended up becoming very good friends and partnered more into many other projects in trading and outside of trading. So within this year, I pray that God is going to help me to give you the best knowledge. I will give you everything I know. Ask as many questions as you can, because I will ensure that I give you everything that I have learned. In conclusion, I want us to look at what our class will be about. We are going to have 1 hour interactive classes every single day, Monday through to Friday. These are the compulsory classes. As for the weekends, because weekends are mad with a lot of activities, sometimes I will be telling you in advance when we can have top-down analysis for you to see what is happening in the current market time, where I can be able to do real-time market analysis, projecting where prices are likely to go to next as a bonus class, but not every single Saturday. So our classes will be, first 15 minutes will be dedicated to reviewing the assignments. So I'll be sending you assignments, not difficult assignments, just multiple choice questions. Then I will be teaching you continuously for 30 minutes. As I am teaching you, I will request that you jot down some pointers where you will you can ask questions within the final 15 minutes. Now, I would like to really extend sometimes, but as you well know, I have shared with you my daily routine. And you can see that everywhere we have put in the classes, that after the classes, I get right into trading and into the financial markets. I am actively trading and I am a full-time trader. What I am doing now is part-time, teaching students how to be consistently profitable. And due to that, as much as I want to extend the classes, I may not be able. So that's why I will request that we both of us be as punctual as we can every single day. And in case you have any rescheduling that needs to be done, kindly communicate in advance so that I can plan accordingly and we can reschedule that class to a weekend, 1 hour during the weekend. We will decide what time when we discuss. So far, with that orientation, do you have any question? Because I'd like to go right into the class.
No questions for now.
Okay. So I want us to start with the first lesson, which is what is Forex really? And I'm gonna scroll through my notes, which I have extracted from various sources, put together, and I have an interesting way of delivering it. We are not gonna actually go right into looking into the notes, but I'm going to read along as I expound more on the notes. It's very easy. I like using black and white screens for maximum attention. So we are going to go through what is Forex, what is traded in Forex, buying and selling currency pairs, Forex market size and liquidity, and how to trade Forex. And we are going to follow this system one after the other. And in case there's an area which is not clear, we will just be reviewing it 15 minutes before the class. You can ask, we review. If you have an issue with the assignment, we're looking in the first 15 minutes. Then in case there's anything that you want me to clarify as we move in the class, we can do it at the end of the class, the last 15 minutes as we discussed earlier. So we're going to look at what Forex is. Number one, I know you have interacted with Forex. Why? Because currently you are in a different country than your mother country. So being in Thailand means that quite often, whichever area you want to go to, either it's in Kenya or it is in Thailand, the currency that you carried from the previous country, you will have to exchange it to the country where you are in, so that you can be able to purchase services and also purchase goods and be able to run your life smoothly. In this transaction, this is a form of Forex, or better known as foreign exchange, just as the name says up here. So, what I will give you an example of what we normally use mostly in this trading market. For instance, if you look at this image, this is a symbol that symbolizes the dollar. It can be the US dollar, it can be the Canadian dollar, it can be the New Zealand dollar, so on and so forth. And the one below here is representing the Japanese yen. So let's say you wanted to go to the United States and you are a Japanese. So what you will do is that you will have to exchange your yens for dollars. And if you do that at the right time, you might stand to make some good money. Let me give an example on our Kenyan shilling. At a time 2 months ago, 3 months ago, the Kenya shilling had lost a lot of value in relation to the USD. We could see the Kenya shilling had skyrocketed to 163.64. And right now, if you look at the exchange rate, we are talking about 130, 135, or even less in some Forex bureaus. So we can see there's that fluctuation of prices from 164 to 134 or 135, and we can see we have a whole 30 shillings difference. That means if there's somebody who bought the Kenya shilling at 164 at that time and still hoarded the dollar at that time, or stayed with the dollar, they could have made substantial losses of around 30 shillings per USD. And that is what we find and experience in the Forex market. So you might find it being commonly known as Forex, or the foreign exchange market, or FX in short. So those are some terms which people normally use. Now, what is the average traded volume of the Forex market? We can see that this is a 6.6 plus trillion a day volume. I don't know if you are aware of any other business that transacts this huge trading volume a day, but as for myself, I can see that this is a very ginormous business where somebody can enter the market and get something from themselves on a day-to-day basis. That's the convenience, because in a liquid market, it is very easy to make daily substantial gains or weekly or monthly substantial gains. Now, I want you to look at this image, and I want you to envision it as the New York Stock Exchange, this small monster here. And this is what $200 billion looks like, because the New York Stock Exchange actually trades 200 billion USD every single day. It seems huge, right? But in comparison to the trading of the Forex market, the Forex market is quite bigger. And to put it into perspective, we are going to look at something like this. Remember the big image the image to your right was the big image that you see here. But when it is compared to the Forex market, this is what the Forex market would look like, and as compared to the NYSE or the New York Stock Exchange. Now, what I have come to actually realize is this is the reason why most people are attracted to the Forex market, unlike in the stock market, because barriers to entry are lesser in the Forex market. Okay. Now, when I look at the average trading volume of different markets, we have the Forex market, which we said was 6.6 trillion. And we have the New York Stock Exchange market, which is 22.4 billion USD. Then we have the other largest stock exchange, which is the Tokyo Stock Exchange. And we have the London Stock Exchange. I would have wished the Nairobi Stock Exchange to be next here, but it is far off from the scale and the daily trading volume. But we get the perspective of what this stock exchange does, these stock exchanges does, and we know that's where stocks are sold and bought in the public domain. Okay? So as we continue to what we have, is that I would want us to check on how does the Forex market work? How much does it run? And if you look at the screen, we can actually see that the Forex market runs 24 hours a day. By that, it means that it opens on the extreme of one continent and closes on the extreme of the other continent. But it doesn't run 7 days a week, not for Forex, not for stocks. For Forex and stocks, it runs 5 days a week. It closes down during the weekends and mostly also closes down during events or big functions of countries and so on and so forth. For instance, this year we have the elections in the US. And since we have the elections in the US, you will find that during that time they have elections, the Forex financial market will most likely be closed down, especially for the ones who are trading the US economy. For instance, anything touching the dollar, the Euro USD might not have very good price action. The stocks will be closed. The indices are going to be closed during that time. So, but we are going to delve deeper into seeing how those economic activities affect the market. So when the market opens, we normally have 4 sessions in the market. We have the Sydney, we have the Hong Kong, which is called the Asian session, where people normally call it the Asian range. Then we normally have something we call the London session or Frankfurt. Frankfurt comes before London, but we normally call it the London session. And then we have New York closing in the far end. Now, this is the first part of what we have looked into. I don't know if so far there's anything you need clarification.
No, I'm good. We can continue.
Okay. So what is traded in Forex? So some people have so many opinions of what is traded in Forex. But just to cut through the whole chase, we can answer this simply by just saying we trade money in the Forex business. In short, hii ni biashara ya kuuza na kununua pesa. That is what Forex actually means. You sell one currency against the other, and so on and so forth. So when we're talking about trading money, it means that unlike in the stock industry or the stock business, where we buy shares in companies, when you're talking about Forex, you're participating in Forex, you're not actually really purchasing the currency when you're trading it, no, but it's like you are just buying a share in a particular country. Okay, just like you would buy any share in a company like Safaricom or a company in Thailand, a good company in Thailand. Sometimes I think there is Toyota in Thailand and Ford and very good companies there which make very good cars. That's what I am well versed to know with that area. And I also realized that I saw, in your business portfolio, you actually deal with sending currencies a lot. Is that true?
Yes, I do send. I do exchange.
So that means you are well versed with the what is actually happens in the exchange of currency pairs. Okay.
Yeah.
Good. Now I want us to go to something called the major currency pairs. I don't know if you have interacted with all of them or some of them. On your screen, which pairs have you interacted with? Which haven't you interacted with? We have Canadian USD, just to interact and understand.
I've used USD,
Yes.
Canadian. I think those are the two major.
The two major ones. Okay.
Yeah.
So I just want to let you understand that these are the 8 major currency pairs. When we are looking at currency pairs, they are clustered from the highly traded ones to the low traded ones, which might be very, very volatile. Okay. Now, when we're talking about major currency pairs, we are talking about the dollar in no particular order. So when I mention them, they're in no particular order. We have the United States dollar, that's 1. We have the Canadian dollar, that's 2. We have the Great British Pound, that's 3. We have the European euro, that's 4. We have the Japanese yen, the Australian dollar, the Swiss franc, and we have the New Zealand dollar. So these are the 8 major currency pairs. So they actually hold a very big percentage in the Forex market. Okay. So the major currency pairs, they are called that because of their highly traded volume. Okay. I want us to look at them here and on this chart. And how are they normally referred to us in the Forex market and abroad and in other lingo like the nicknames? So we have the USD, which is a short form code. I'm going to show you how these codes are normally created. We have the United States, we have the dollar, it's called the greenback, either the back or the greenback. We have the EUR, which is the currency used in Eurozone. We have France, we have Germany, we have all those countries who use the euro. And we have the currency, it's called the euro, and the nickname is fiber. We have JPY, which is used in Japan. It's normally known as the yen, and the nickname is the yen. We have the GBP, which is a Great British Pound. We normally call it the pound, and the nickname is called cable. So sometimes you may hear me use cable or fiber or back in other lessons. So these are just pointers to know what the top 8 or the major currency pairs are normally called. We have the Canadian, the CAD, Canada, the dollar, the loonie. We have AUD, used in Australia, the dollar, Aussie. We have NZD, New Zealand, dollar, and we normally call it the Kiwi. Okay, so this is just a depiction of what it is. Now, how do they come up with this type of short codes for these currencies? Now, in the International Organization of Standardization, which established the 3-letter codes for currencies, what they normally do is that they take the first 2 letters of the country and the currency name, and they come up with this. So for example, in these examples, will you tell me what this currency stands for? This country name currency stands for?
New Zealand.
Yeah, New Zealand. And D automatically means the dollar. So that's why we have it up here as the NZD, which is the New Zealand dollar or the Kiwi. Okay, so that is what they do. The same thing. I'll give you an example. Can you just give me an example of what the Kenyan shilling code is?
KES.
KES, yes. Because I remember a while back when we were in school, we used to have exams where they write the Kenya shilling as a KSH. I don't know if you remember that period.
Yeah. Most
Yes.
people do still now.
They still do.
Yeah.
They still write it KSH, but the official currency for the Kenya shilling is KE, depicting the Kenyan, the country name, and the S depicting the Kenyan shilling, or the shilling that we use. So that is part of that. So I want us to go to buying and selling pairs. Just a moment. I want us to go to the next slide, which is buying and selling of pairs. So now what happens in trading is the simultaneous buying of one currency against the other. Let me give you an example of this image that you see here, which looks like a tug of war. So assuming this is the euro, I'm going to annotate. Assuming this is the euro, and we have this as the USD. Okay? Or another one, I'll give you an example, the GBP and the JPY, which is the Japanese yen. So assuming this is what you have, it means that you have to pair these two to give you a transactional charge. The same way you'd pair euro and USD for you to be able to do a transaction in Forex and in trading. That is what actually happens in this market. It's normally simultaneous. You can never have euro as its own. It has to be paired against another currency pairs. So these currency pairs are constantly on a tug of war. And this is where you see superiority of pairs against the other, or superiority of currencies against other currencies. So I want us to look at major currency pairs, because we have realized that this is a simultaneous transaction. So we have three categories of currency pairs. We have the major currency pairs, we have the minor currency pairs. They are not here, majors and minors, and I will show you. We have the crosses and we have the exotics. Okay, those are the three main categories of currency pairs. Now, what we have here is the euro and the dollar. This is the symbol and the symbol for the euro and the symbol for the dollar. In this instant, and just for the information that I will give you, is that the euro USD is actually the highest traded currency pair in the world by volume. So you find that many traders are introduced in learning the euro USD. As we move forward, I'm going to show you why it is a good asset to trade, either as a beginner, and why it is also a very bad asset to trade as a beginner. I will show you the two sides of the coin for the euro USD, because the example that I'm going to use most of the time in my practical lessons will be euro USD to stand for the currency pairs. And then we are going to look at commodities. An example, you're going to look at gold. You're also going to look at Bitcoin as the cryptocurrency, and the other indices and the dollar index, just to give us a framework of correlation. So we're going to look at what we have, and these are the major currency pairs. We have euro USD, USD JPY, GBP USD, USD CHF, USD Canadian dollar, Audi USD, and NZD USD. I'm going to explain to you as we move on why the euro comes before the USD and not the other way around. Why are they called major currency pairs? Now, we have 8 major currencies, but we have 7 currency pairs. 1, 2, 3, 4, 5, 6, 7. Why do we have 7? Because all of this asset had to be paired against the dollar, which stands here as USD, to be called a major currency pair. That is the reason why you see them paired with the USD, and they are the 7 major currency pairs. So when you're looking into your charts, and when we are looking at volume and the traded volume in pairs, these are the ones which are most liquid in the world. That means they can be traded, they are easily traded, the spreads are low in broker platforms, and the transactional charges are low and commissions are low. So the more liquid an industry is, the lower the spread and the charges and commissions that asset has because of economies of scale and the numbers which people are trading it. Okay? We can go on, and I will now refer to the euro crosses. Now, when you're talking about crosses, cross pairs, which are sometimes called minor currency pairs or minor currency pairs, you will find that now in the top 8 pairs that we have called the major currency pairs, when you take the euro and you pair it against every other asset apart from the euro USD, apart from the USD or the dollar itself, you are going to have euro crosses. So here we had the 7 of them: Euro USD, USD JPY, GBP USD, USD CHF, USD CAD, Audi USD, and NZD USD. Now let's take the euro minus the USD and pair it amongst all other assets. So what you're going to find is we have Euro CHF, Euro GBP, Euro CAD, Euro AUD, and so on and so forth. If you take the Japanese yen and pair it against all other major 7 pairs, you're going to find the yen crosses, similar to the euro crosses. If you go to the pound crosses, where you have pound and other assets, you're going to find the pound crosses. We also have other crosses across all those major currency pairs. Okay? Now, let's go to exotics. This is where the Kenya shilling also comes in, and another very famous pair that is traded called the South African rand or the ZAR. Okay? So, exotic currency pairs are from emerging markets or developing countries. Kenya being one developing country, South Africa being an emerging market, all those are, or Brazil, and so on, we find that these are exotic currency pairs. Now, one thing you should know is that they are tradable, yes, but their transactional charges are a bit higher than the other normal major or cross-currency pairs. Okay, that is what we normally see. So one example I'm going to use for exotics is the dollar and rand, the United States and South Africa, which you call the dollar rand. This is one of the highly traded. It's normally very volatile. It moves, and some traders love trading it, even if it has some high transactional charges in terms of spread from the broker. But it's also a very good asset. We will look at it later on when we get to the practical lessons. Okay, so there are so many pairs that are in the emerging markets. But one thing I wanted to also add on is that just for your information about the legal currencies which are recognized by the United Nations, we normally have around 180. But not all of them are paired against each other. And even if you went to your broker, as much as we have all these pairs, these currencies which can be paired against each other and create huge volumes of pairs, not all of them are available in our trading platforms. We will find many brokers offering you around 70 of them. Okay. Now, we normally have another 2 additional on the 8 to make them 10, where we normally call it the G10 currencies. You can see these Scandinavian countries, we call them the Scandies. We have Norway, we have Sweden, and we have Denmark, which normally use the krona, and the krona these ones also make up the top 10 of the G10. So I want you to notice the difference. The 8 major currency pairs and the G10 currencies. Only these 3 are added when you go to the G10. When we're talking about the major pairs, we're only talking about those 8 that we talked about. Okay? Yes. So unless you have any other question in regards to that, those are the most important elements which I think a trader should learn when they are being introduced to knowing what the Forex, the currency pairs are. Okay? Now, we're just going to go through a summary. Okay? So just to ask you from my end, it is on the screen, yes, but I want to know, what do you understand by the term currency pair in Forex?
Personally, currency pair. It's like bringing 2 pairs together,
Okay.
and seeing the different value,
Yes.
the relative value to
Okay.
each other.
Okay.
Yeah.
Okay. All right. Then just so that we can be a bit more interactive, give me the major currency pairs.
Okay, so we have the US dollar, the New Zealand, the JPY.
Yes.
We have the GBP, we have the CAD,
Yes.
CH, yeah, and AUD.
And AUD. Good. Right?
Yeah.
And of course, we have the crosses in between all that. So I know you have now seen that when you're talking about major currency pairs, there are any pairs which are paired against the USD. And you're talking about the crosses, it is any other pairing without the USD. Okay? That's what we call the crosses. All right? We know there are so many currency pairs, but the ones recognized are 180. Okay? Yes.
Yeah.
So let's just look at the Forex size and liquidity. Okay. So we have something called the interbank market. Now, I want you to understand this. Forex is a decentralized system. Okay. When you look at the New York Stock Exchange or the London Stock Exchange or the Nairobi Stock Exchange, all this has a physical location. Okay, you go talk about the NYSE, you're gonna find it in Wall Street or the New York, where the structure is. It opens, it closes, and so on. There are people there who are buying and selling. They're called stock brokers in there, and that is what we normally see. The London Stock Exchange as well, the Nairobi Stock Exchange as well. But when we are talking about the Forex market, there is no physical location where this happens. Okay, this whole market is OTC, over the counter. It is run electronically with a network of banks and non-bank financial institutions over a 24-hour period. Of course, 24/5, not 24/7. Okay, so this is a global phenomenon. It's something that happens. It is a network that happens. You have maybe in Africa, money being changed. This is something that happens consistently. Okay, that is what it means by over-the-counter market. Okay, we can see that the currency distribution in the market, what we have, the dollar is a highly most distributed currency in the world. Number one, we call it the king. The dollar is king. The reason why it is king is because it is actually takes the biggest percentage of transactions in the whole entire world. And that is something that we also experience here. Most loans are borrowed in the dollar and so on. And we can see the graph goes along with all these other currencies. Okay? Something that is making 84.9% of the transaction is not going to end anytime soon. As much as I want to believe the other emerging markets like the cryptocurrency or the crypto market, I don't think people are yet ready to give up what they actually know and have given value over a period of time. Okay, so we can see what we normally have composition in the world FX reserve. We have the dollar being king. So that is why when you're trading any asset which is paired with the dollar, you will have more opportunities than any other assets. For instance, if you're trading Euro USD, GBP USD, gold, or even indices, they're all paired against the US dollar. You will find that they are liquid and volatile at the same time, meaning you will make money with very less effort. Okay, those are some of the things. So just to notice and to give why the US dollar plays a central role in the Forex market is because by what we are told is that the US economy is the largest economy in the world, which might be overtaken soon by other countries like China. We have the US dollar being the reserve currency of the world. So many reserves, bank reserves, even the Nairobi, central banks like in Kenya, we want to have very high dollar reserves so that the country is deemed a bit stable to work in the global economy scheme of things. We can see that US has the largest, most financial markets in the world. The stock exchange, all that is very liquid because money is moving and exchanging hands from production to exports and imports and so many things. That's why the United States is the largest. Then we have a very stable political system, democracy. We have not had any issue in the US for a very, very long time. So people prefer having the dollar. It's a military superpower. It gives represent half of international loans and bonds, okay? And it's the medium of exchange in many cross-border transactions. I know if I came to Kenya with the US dollar, I will transact in most institutions. The same way if I would come with the dollar to Thailand, I would transact most transactions with the dollar in institutions mostly, and they will be very happy to accept money in dollars. And also one other thing is that many, like oil, most of the oil is priced in US dollars, and it was called, and it is still called, the petro dollars. We might see changes in times, but as at now, that is where the economy of the world stands. Okay? So the main functions of the Forex market are, number one, transfer funds from one currency of a country to another country, to another currency, okay? So the same way we said, if you want to transact anything in Thailand, but you have Kenyan money, you have to find a channel, either to transfer the money from Kenya shilling to Thailand shilling, or from the Kenyan shilling to the US dollar to Thailand shilling, depending on the currency or the institutions which you're using to exchange your money. You can provide short-term credit to finance trade between countries. That's what we do and speculate to avoid hedge against foreign exchange rate fluctuations when a transaction is initiated and when payment is received. And the other function is to speculate. Now, this term speculation is actually what you and I are going to do, or what I have been doing in the market, okay? That is the main function where you are going to take part and play in this market. All these other things about short-term credit are for larger institutions. But when it comes to day traders or scalpers or swing traders, we are all known as speculators. Okay, so that is what we do. Now, the trading volume bought by speculators is estimated to be more than 90%. Now, we are just these people who, when we are starting, we have no idea what the market is. And the reason why this market is so hard, in my experience and in my research, and by trading on a daily basis, I've come to realize that many traders evade a lot of building of their skills and practice. As we move on, this is one course where you're going to practice a lot, because this volume, this 90% volume, is what is normally looked for by the institutions. This is what they are after. That's why they make this business psychologically hard. That is why they make people win a little and lose a lot, and they are stuck in the cycle over and over again. Okay? So, how do we trade Forex? Okay? So, now we can come up with very many ways of trading Forex. So, the financial instruments that are most popular, number one is retail Forex. We have spot FX. We have currency futures. We have currency options. We have currency exchange traded funds or ETFs. We have contract for differences called CFDs, and we have Forex spread betting. Now, have you dealt with bots yourself?
I have binary bot. I have another bot for
Yes.
MT4.
Yes.
But personally, I have not plugged it, but I was trying to look for one because I have a 100K account that I need to pass.
Yes.
Yeah. Yeah, but I'm not personally. I just dealt with binary bots.
Oh, okay. So if you're looking at binary and all that, that's where I wanted to come in. Do you see this term here called Forex spread betting?
Yeah.
This is what they call binary. Okay. It's
Okay.
called spread betting. So all these are different forms of trading. Okay. So
Okay.
what we are actually now after is more of retail Forex and spot FX. This is what we are after. The other things, for example, in the US, they don't allow retail Forex or spot FX. They normally allow currency futures. We are going to look at them deeper and deeper. Okay. So what we are normally interested in mostly is spot FX. Okay. This is what a trader does. So you're going to see here that if this is me or you, the trader, there are all these things that happen here. So mostly what we are going to draw to is spot FX. We are going to learn about retail Forex, contract for difference, and spread betting. But I will not delve into these two, okay? Mostly. Spread betting, I will not touch, because this one is where you find companies like Pocket Option, Binary, all that. This one I do not touch, because it's very hard to come up with a consistent strategy that can give you consistent gains over time. I have, in my experience and in the time I've been trading, I know people normally are lucky in spread betting, but you will not find somebody who has consistently made it in this sector. But when it comes to CFDs and real Forex, you will find plenty of consistently profitable traders. Okay. So futures are contracts to buy or sell at certain asset at specific price or on a future date. These ones, there's a reason why we are going to go through them physically on the website to show you sites where they trade futures. In short, futures are, let me give you an example. You have Euro USD in CFDs. So I'm going to annotate on the screen. So I'm going to give you an example here. You have Euro USD. Just a moment. You have Euro USD as the pair. Euro USD as the pair. Euro USD as the pair. Now, when you go to futures market, you will find Euro futures, and you will find a lot of futures in the market. This one is normally a contract, but it is time-based. And this is what most of people in the US are allowed to trade. We are going to go through some examples later in the course to show you these platforms, what they do. And you can also use futures. There's no problem. Even when in Kenya or when in any other part of the world, if you get to the right platforms, you will be allowed to trade futures. But there are very many terms which are needed and which are different from trading the CFD or retail FX of the Euro USD in this function. So we're going to go through that, but mostly what we want to look at is the retail side, the spot FX. So the spot FX market is an off-exchange market known as the over-the-counter market. Now, this is what we are mostly interested in. When we are looking prior to what Forex is and how we trade Forex and how it is traded, we realize that it is a decentralized exchange, meaning no one specifically controls it, but an interbank system. So we want to take part in this interbank system, okay? Now, this is where you will put money in your account or a broker's account, or in recent times, we are now buying funded accounts. We are no longer now seeking private funds from people. What now we are doing is we are passing funded challenges, and we are using these challenges to leverage our profits, because this way it gives you much money in the market. So that is what we are going to delve in the spot FX market. Okay, so that is basically what we have. The other thing that now we look into is the retail Forex. This is the secondary OTC market that provides retail. Now, we are called the poorer traders, but I don't call us the poorer traders, but we are the last in the food chain. Okay, what does this mean? That Kevin has a certain amount of money. He maybe has 1,000 USD that he wants to trade in the market. Now, for Kevin to trade in the market, he cannot be allowed in the big pool with Barclays and JP Morgan Chase to take part in the large transactions. What he has to do is he'll have to go through a broker so that this broker can allow him or give him a platform that is leveraged. Maybe 1:400 of his $1,000, where he can be able to transact, buy and sell contracts for differences in the Forex market. This is what it means by retail Forex. Okay, and this is where now we look into brokers. This is where we look at currently into funded accounts. Okay, and this is what we normally do. So with maybe $2,000, you can open a trade of Euro USD at a value of $100,000. So this shows you that this is a leverage, because you just divide 100,000 divided by 2,000. You are going to find that this amount is leveraged at least around, is it 50 times? Around 50 times, okay? And that is the money that now you can be able to afford a bigger positions and make more money in the market. Now, the challenge is this, is that this is a double-edged market. It's a double-edged sword. Leverage can be good and amplify your profits, but leverage can be bad and still amplify your losses. I know you have seen a lot of money vanishing in the Forex market and in the binary market and in all these platforms. There is nothing like a big account. If it is over leveraged and bad risk management is used, that is where you find traders losing a lot of money. So our job as traders is to actually play our speculative role. Okay, it's like making bets. Somebody asked a while back, is Forex gambling? And I would say they are brothers and sisters. Forex trading and gambling are brothers and sisters. The only difference is in Forex, you can come up with a strategy, or you can learn a strategy and be able to increase the odds in favor in the market. And you can be able to gauge yourself on how you're performing based on the strategy you're using, the risk management you're using, the rewards you're getting, and so on and so forth, unlike in the gambling industry. Okay? So most of these terms are intertwined. We have Forex CFD is a contract for difference. This is what mostly we normally do. And you find that they are agreements. You don't own the asset. For instance, when you're trading Euro USD and you say, I want to buy Euro in the market because I'm favoring it against the USD, or I want to buy gold XAU USD because I think it's gonna increase in price and I stand to make some money. You don't physically own the gold or the dollar in that transaction. What you do, you just sign a contract, which is an automatic contract known as a contract for difference, where you say that I have agreed to buy this money here or this value at 100, and when it gets to 150, I will plus 150. I'll say I'll make a 50 shilling margin, or when it goes to negative 50, I'm willing to close at a negative 50 loss. That is what contract for differences mean. All the notes I will attach in the email, as I also send the video to you for references. Okay? So that is basically our first class. We were learning just some very, very good basics. Now, I'd like to give you the floor so that you ask questions in regards to what you might not have gotten from the market or from the lesson. Are you there, Mariana?
Yeah, I'm here.
Okay. The floor is yours, eh?
You know, I'm trying to think. Yeah, I had all this. I had read a lot about all this in this website, Baby Pips. I didn't. I don't know. I don't. I don't classify myself as a beginner in that because I've really the past few weeks I've been really going up and down reading all this. Yeah, to a point even I have a funded account.
Okay.
Yeah, and I feel like it's like I'm going back every time. It's like this Forex just keeps taking me back to where I started. Yeah, but it's a good thing to start here because this is where you always start. Yeah, and so far so good. I understand till here. Yeah, yeah, that's all I can say for now.
Now, the reason why I normally start from beginning is this.
Yeah.
If you look at my course,
Yeah.
and that's why I sent my course way, way before. I have never, ever told a client or a student, and I have quite a number, what I will teach you and I will not teach you. There's a reason why I do that. And I will give you an example. I have had previous students, okay, who come and they say, I know this and I know that. I don't know if you have experienced that in your class. You're a teacher yourself.
Yeah, I do.
Yes. You will find a student who tells you, I have done this and I have done that. And I always tell them, that is fine. If you have done it, that is okay. And I respect that. Okay?
Yeah.
But when it comes to my course, I have picked very different information. I know how Baby Pips looks like. And if you look at my course, it is clearly written so. That is an extract from Baby Pips. Okay? It's written here. They are BP extract notes. Okay? Yeah. Do I teach everything in Baby Pips? No, I do not. Okay? Hello?
Yeah, I can see you selected the important.
So what I did and what I have always done is that I pick what I know is relevant for the course. Okay? Baby Pips being one of them. The other, and what I normally do is I also like gauging what the trader has learned over time. All right? Having 1 year to study is not a small period.
Yeah, it's a long time.
It's a long time. Another thing I will tell you this. I used to to think that because I have read a lot, I went back so many times. I took 3+ years to understand Forex. Do you know why? Because I went with the mentalities and nilishasikia hiyo. Nilishaambiwa hiyo. Ayo niliona baby pips. Are you getting what I mean? When we started, I told you, you have to be very open-minded. If we'll have repetition, if we'll have to go through what is Forex next time, if I send you an assignment and I see your performance is not okay, we are going to go back to this lesson until you understand it.
Okay.
Are you getting my point?
Yeah.
Yes. If I send you your assignment and it is in the notes and you don't perform well, we are going to go back to it because it will show me in your assignment that you did not understand. Yes, you have read and gone through all that information, but are you willing to trust and submit to the process? You see, we have a conflicting issue here, and I will be very frank with you. The fact that you have interacted with the market and the market has taken some money from you, you feel like the market owes you money. Let me tell you this, Mariana, the market does not owe you anything. You took yourself to the market and you gladly gave your money to the market. Maybe not willingly, but gladly. And I will tell you this and I will keep telling you this. Stop trading the live markets, Mariana. Assume that you are in baby class and forget the executions. Wacha haraka ya kupatia soko pesa yako. You've given your money to the market once. You've given another big chunk to the market again. And I suspect that you have also given it some money, even with the period we have not talked with you. I will tell you this. Mariana, stay off the chart. Stay off this binary. Stay off buying these funded accounts. Stay off using your money. Why are you giving the Forex your money? I don't understand. Tell me why. Why do you need to give the market your money?
No, it's not that I need to give the market my money. Like I told you before, right? I have a company that we are investing and I need to get this straight for now.
You need to get this straight, but are you patient enough to do it? Are you patient enough to trust the process? Are you patient enough?
Let me tell you, Kevin, I've been learning a lot, by the way, a lot.
Yes.
So much. Yeah.
Good. And I will still encourage you to learn a lot. Okay. But one thing in this market, the information, how it is delivered. Now it is, you tell me if you will trust the process and I deliver to you a very good course from different sources and from my experience and from my knowledge. Okay?
Okay.
I will take you step by step. It doesn't matter whatever the sources are. Okay? If I wanted to come up with a very different course from Baby Pips, I will just tell AI to do me a very good course and it will. Okay? AI will do it. I don't have to. Okay? Because I am teaching you what is relevant. I have Baby Pips here. I can just go right and tell you, Mariana, enda Baby Pips usome. But by the time I talk about Baby Pips, you will be so wasted. There is nothing you're going to gain from it. Okay? But every morning, I have told you, first month, we're going to learn this. I'm going to give you assignments for this. Second month, this. When I see you are able to submit to the process, now I'm able to give you everything I can give you, and I'm giving it to you firsthand. Okay? So me, I'll tell you, whether you have a company that you're making money with, don't put your money in a risk in an area you don't understand well. Don't. This time it will be very little money. The next time you'll be very big money. You don't want to lose a lot of money in this market. You don't want to. Okay? So I will request you for the next 3 months, if you can, refrain from that market. Will that be possible or not?
3 months. Why? Okay, we'll see.
No, you want to know why? Do it for 3 months. Do it.
3 months is a lot.
It's fine.
Yeah,
It's fine. That's what I'm saying. If it is a lot, then keep trading for the next 3 months. Then in 3 months' time, you will be the one telling me why. You will be the one telling me why you should not have done that. Now, I'm allowing you to learn those lessons firsthand in the next 3 months. But if you will trust me for the next 3 months to deliver to you without question, in the next 3 months, you will be able to handle what you have now and try and do what you want to do tomorrow. But I'm telling you, with whatever experience I have interacted with you, you've told me about binary bots, you've told me, yani Mariana, nikikusikia najikumbuka venye nilikuwa miaka 5 iliyopita. When I hear the way you are talking, when I hear the way the things you are in, when I hear you have a binary bot, when I hear you have bought a funded account, you're just echoing my experiences when I was so green and I was so hungry and the market drained my emotion. It put in so much fear in me at some point I could not even execute the market. I did not even want to see the markets. I didn't even want to trade. Utafika mahali Mariana utatoroka. You think you are scared? You are not scared yet. You are not scared. You have not even lost any money yet. Hii ni kionjo tu. I don't know if you understand the industry you are in. This is an industry where I tell you unlearn to learn. Unlearn everything. Unlearn everything. I will mention to you, ni kama trader unaona kuambia, acha nikuonesha venye support and resistance inafanyanga. Anakuambia nishasoma hiyo kwa baby pip support and resistance. Then I look at a trader and I wonder, you don't know what you're saying. You really do not understand what you are saying. Because there are very many ways of making money in the Forex market.
So what am I supposed to do with this funded account? Just let it expire and...
What funded accounts are you guys trading that are expiring? Which company is that?
No, I mean, I'm still in the, what is it called? I'm still...
Trial stage.
Yes.
Which company is that?
Funded Next.
Funded Next. That's okay. But just write them an email.
And will they even accept?
If not, keep trading. Keep trading. But what I'm requesting you, keep off. 1 month. Weren't we talking with you the other month in May? Na May ikaisha hivyo.
Yeah.
Si tuko naongea beginning of May. Na iliisha. If we started in May, we'll be in 2nd month right now. True or false?
Yeah.
So wacha kusema ati 3 months ni muda mkubwa. Mimi ni request na kumekia. You have to submit to the process. If I am going to teach you, you will have to come up, yani ukuje ni kama unaingia kindergarten ya Forex. And I do that to every trader. Because there's a reason why they are not consistently profitable and I am. Na nikuulize, who wants to teach this? I don't want to teach what is Forex. I don't want to teach it. To be honest, I don't want to teach it. I don't like teaching it. It's boring. I like the good stuff where I am an expert. But it is necessary. Are you getting me? It's necessary. Yeah, it's necessary. I don't like teaching it. You can realize ni scrappy yote course. Ninaweza scrappy yote. But nimerealize nikianza huko mbele, hakuna mtu anashikanga kitu. I used to teach in Tanzania for a whole year. I taught Forex in Tanzania and we were doing it for financial gain. You're getting me? We were doing it purely for financial gain. We used to do something called a crash course. We used to teach for 3 days, Friday, Saturday, and Sunday. We used to teach to train like 100 people, mnalipa $300 siku tatu, $100 per day. And what we're gonna hype the next week, but there was no consistently profitable trader we produced. But we made a lot of money with that business. Then I came back to Kenya and I was like, I'm not ever gonna teach someone like that again. I will start from scratch. I will teach them what they need to know. When we go in the charts, they can relate every single piece. that I have taught. Every single piece. They have to learn. Lazima ulearn kunyenyekea kwa hii biashara, Mariana. Sasa kudanganya. Hii ni biashara ukikuja na ujuaji ama kiburi itakuramba. Nimeona watu wengi wakiingia kwa hii biashara na wakienda. Tulianza wengi sana hata hiyo Tanzania, mimi ndo nimebaki na kijana mwingine mmoja. We were like 30 of us. Only 2 of us have survived in this business. 2 of us. Everyone else, mmoja ameenda kutengeneza epoxy flooring, mwingine anataka kufungua biashara nyingine, wanatuuliza nini mnafanya nyinyi? We just stuck to the process. We just submitted to time. We submitted to the boring stuff. No trader. Nikwambia Mariana, umeenda kwa demo? Hapana, sijaenda kwa demo. Kwa nini Mariana hujatumia demo? Let me ask you now, why haven't you used the demo?
I've used quite some
For how
time.
long?
It depends with what I'm doing.
No, I'm
It
asking
could
you,
be-
what time, how long have you used a demo account?
Different times, but long time, like 2 months, but not like every day. It depends what I'm doing, what I'm looking at. Maybe if my strategy, the one that I learned, is working or something like that. Yeah.
Good, that's a problem. That's a problem. I can see that problem right through there. You have not consistently traded a demo account for 3 months or for a whole month straight. You have not. You have not gotten to it on Monday and written notes. What did I observe in the market? Did you journal? Have you entered the market with a demo account and still journaled without expecting any returns from the market, just to learn how the market is? No, you haven't. Why? You want to jump the process. You want to skip the process. Mariana, hii market haina mtu kuwa mwerevu. Acha tu nikwambie ukweli. Hii sio biashara ya watu werevu. Hii practically ni ya watu tu wanakuanga tu chini wenye hata hawa expecting vitu kubwa kubwa. Those are people who succeed in this business. Hii ni biashara ngumu, my dear. Believe you me. It's a very tough business. Inakaa ping pong, inakaa game, inakaa kitu rahisi. But the day now we are fully sorted, tukishafika huko deeper in the course, ndio realize ndakuwa nakwambia fanya hivi kwa chat, unashindwa nini nakwambia. So, submit to this process. Okay? However basic you think you know whatever we are learning, you don't. However basic it is. If you have realized what I've done, sijakusomea ati vitu hivyo, we are just using this as guides. Okay? Ndio nikienda kule ndani, nisikuambia kitu fulani useme kevo hiyo siku mention. You're getting my point?
Yeah.
I also want to know, can you journal? That's why I'm giving you assignments. Sasa kwa sababu ati ya kitu kingine, I'm giving assignment to see anaweza journal. That's the qualities I'm looking for. No. The qualities I'm looking for. There are things I want to see. How is she doing them? And the only way I'm going to see them is here. Because tukiingia practical ni marathon, ni kule ni kuenda. Fanya hivi daily, fanya hivi. Draw this for me. I want to see this pattern. I want to see this. Screenshot. Send it to this. It will be all about attaching. Okay?
Yeah.
Yes. Do you have any questions? So if you ask me, wachana na mambo ya live markets. Na nilikwambia hivyo from day one, hata tukipatana na wewe. I told you, before anything, before we move on, just keep off. Let me ask you something, Mariana. Is Forex making you money right now?
Yeah, I did, but not consistent.
Not consistent, sindio? So you're here for consistency.
Yeah.
You're here for guaranteed results where ati unaweza sema January nilitengeneza 10% ya account yangu ama 20%. February nikatengeneza 7. March nikatengeneza 3. April sikutengeneza pesa, lakini May nikatengeneza another 15% ikakava April. Isn't that what you want?
Yeah.
Yeah, something that is quantifiable. A reason for you to quit the normal 9-to-5 jobs.
Yeah.
Yeah. So if that's what you're looking for, then you will have to brace yourself for some boring stuff and for some very exciting stuff and some very hard stuff at the same time. Okay? So you allow me to deliver to you my class and my course. We are not here for a day. We are not here for 2 days. We are not here for 3 months. We are here for a year. So if you can hold your end of your bargain for a year, I'm going to hold my end of my bargain for an year. Okay?
Yeah.
Yes. So I don't know. How do you want me to deliver it? Maybe you have, two teachers, wanaweza kuwa na different way of delivery. How would you opt to be delivered to? Tell me.
No, it's good. Yeah, your table of content, it's okay.
Yeah. So I wanted just to understand tuone kama kuna mahali popote hapa unaona any different. Hizi vitu zote hapa. Are there things here maybe you're well versed? Angalia hii list uniambie. What are you well versed here? Niambie tu. Kwa hiyo novice. No, maybe nikae chini nione what am I going to shed off from the course. Because what now we are looking at is introduction to financial markets. Okay?
Yeah. The one we just did.
Yeah, and you are continuing but deeper in it. For the next 3 days, it will be just a lot of theory.
Okay.
Yes. So have you interacted with chatting platforms?
Yeah. I know TradingView. I've done MT4, MT5.
Yes.
CT Trader not yet. Ninja Trader, I tried to register. They didn't approve. Yeah, only those.
Now, knowing them and interacting with them is one thing. Okay. How well versed are you on a scale of 1 to 10? How good are you in using them?
TradingView 8. MT4 I don't like it personally, but MT5 I'm good.
Okay.
But on the phone, not desktop.
The desktop.
Desktop.
Okay. Now you see that's now where we are differing, because on the phone you're not able to sometimes quantify your risk. Okay. Yes. You're not able to do that. You'll enter with some varied types of lot sizes. Okay. So however much you know how to use them on phone, now you see what I'm saying. These things, and that's why I'm telling you, it will take us some time. So if you're willing to submit to time, then you will benefit fully from this. Okay. That's the difference now, because najua trading view, but ukiangalia trading view saizi nifungue, kuna vitu nitafanya huko utashindwa nini Kevo anafanya. Unaget? Kuna vitu nitaweka kwa chat. You will not even know how I put them there. That's why I'm telling you, it is a training. I'm training you to use all these things to your maximum output. Sio recorded. Mimi sikutumii video recorded. Hapana, tukienda kwa trading view tuna interact na wewe, tunaangalia hii ni inafanyanga hivi, hii inafanyanga hivi, hii inawekanga hivi, hii wana save hivi. Kama kuna nini natumia huko. If there's anything I'm using there, this is what I use. Okay?
Okay.
But if you're well versed with it, then fine, tunaweza ruka. I will give you a choice to tell me what you want me to remove, and I will teach you exactly how you want me to teach you. I will do that.
Okay.
Okay? You have that option to tell me, Kevo usinifunze hii, usinifunze hizo wachana nazo, nifunze kitu fulani, and I will do that. They always say the customer is always right. But in my recommendation, I will serve time to make sure that you never forget what I teach you. That is why I am here. Okay? Higher trader's life cycle. I don't know if you understand the trader's life cycle. Life of a trader must have tools, things to avoid. I don't know if you have that.
No.
I don't know if you know type of charts, all of them. I don't know if you know Japanese candlesticks, bar charts, line charts, Renko charts, other price action charts. I don't know what you have interacted with. Yeah?
Yeah.
Which ones have you interacted with here?
Okay, for Japanese candlesticks, I've learned quite a few.
Yes.
But I'm still confused about them.
Okay.
For the bar chart, I've only used in binary. Line charts, no. Renko charts, no. Yeah. Price action, I was trying to go through it last weekend. It's still not. I'm not that good, but yeah, I'm trying. What I was doing last week is what is it called? The smart money concept strategy. Also the, what is it called? The support and resistance. Yeah. So yeah, I'm trying.
Good. Ndio maana nakwambia, unaona nikikusikiza kila time nina realize you are trying to learn, okay? So what you're struggling with right now, you're going to struggle with a lot of shiny objects. And I'll tell you what I told another student, the previous student mwenye sasa tumemaliza na yeye May. Nilimwambia tukianza, I know there are very many shiny objects because alikuwa ametoka South Africa akakuja Kenya after kufanya kazi South Africa. Nikamwambia I know there are very many shiny objects huko nje. Utasikia ICT, utasikia Forex scalper, utasikia smart money. There are so many things you're gonna hear. So many of them. There is so many shiny objects, especially saizi na YouTube. YouTube ukitafuta kitu yoyote, utatumiwa vitu kama 100 za hiyo kitu. They do selective marketing. They'll only market to you what you can purchase. Okay? Now, what is going to happen is this. That's why umelipia course. Umelipia course kwa nini? Let me ask, kwa nini umelipia course?
To get a mentor.
To get a mentor. Ndio ufunzwe vizuri. Unaget? Hizo vitu umenimentionia, kuna kitu yote nimewacha hapa. Anything that you're looking for. Is there anything I have left out in this nini? Anything? You've come along. Them. All of them are here. Sindio?
Yeah.
And I'm teaching you live. Siku rekodi. So tukianza kuchora support and resistance, nitachora, unashare, unachora, naona kenye unafanya. Sindio? Hello? Yeah. So, what the reason I put all these things here is because of that reason. Sasa nilikwambia trading in the zone ukaniambia unasoma hiyo kitabu.
Yeah, I'm reading.
Na iko hapa. So now nimeiweka hapa. So coincidentally, there's one thing that you're doing already ahead, which is a good thing. Yeah? Easy funded accounts. Yeah. I can allow you to go on with that funded account. Uone how you're gonna perform in it. I want you just to experience it. It's good, just experience it. Okay? So that when we get here and when you're later on in the course, you are able now to pick up some few things and understand what you could have done better. Okay? But if you had to ask me, I'd refrain from the charts completely. Utai kukua mentally fatigued, Mariana. Utakuwa mentally fatigued. Yeah? You'll be very mentally fatigued. Utakuwa unakuja class, market imekuchapa, najaribu kupeleka some point home, you have another ideology somewhere. So if you are looking for a mentor, mimi recommendation yangu inakuanga, nipatie 3 months. You have the rest of your life. Just give me 3 months. Peke yake. Hizi zingine zote tutafanya na wewe, tunafanya na wewe practicals karibu kila wiki, every single time for the next 1 year. So for the theoretical part, give me 3 months. Get a break. Sunananga vacation. Enda vacation. Ya hizi vitu. Weka kando hizo vitu zingine.
I can't afford to do it right now, but yeah, I can.
Nasema hiyo. Nasema si biashara yako fanya. That's where you're making your money from. But when it comes to the live markets, ziweke kando. Robots funga. Zizime kwanza. Utazipata tu. Hakuna mahali zitaenda. Maybe kwa sababu umespend pesa nazo, you are feeling attached to them.
No. It's because so the money I lost, I need to take it back to my business, which I was doing last 2 weeks, trading. Like I'll trade the whole week and then withdraw at the end of the week and then, take it back to my business like that. Yeah.
Okay.
So, which I nilikuwa natumia a very small capital of $2,000, and I really wanted to move from that. That's why I need to buy a funded account, so that even if I don't trade a lot, because what I'm trying to do is I don't want to use high lot size, but still make something at the end of maybe a week, because I did a bi-weekly payout, and still continue to learn. That was my thinking.
It will be very hard to convince you. Very, very hard.
Yeah,
it will be very hard to convince you. Let me do this. Let me review my things, and then we know what to do. Because to be honest, in this business, I have had challenges teaching traders when they have their direction already set. Okay. Yeah, I have had a very, very rough time with traders when they have already a direction set to what they want. Already they are decided. This is what I want. Okay.
Yeah.
Yeah.
I wish I had a better way, because if it's not for the loss I went through, yeah, probably my business will not be shaking. But at the moment, it's shaking, and you know, like I told you,
But there's nothing much you can do about it with trading right now. You're gonna lose a lot.
Yeah. Oh, okay. Maybe I can try to find somebody who can trade for me at the meantime. And,
why are you putting your money in so much risk? I don't understand why. Why are you putting yourself in that state? Why?
The account is already here, so at the end of the day, I still need to utilize it. Yeah. If I can find somebody who is a professional who can trade for me, you know, maybe share the profits.
Trade for you,
I don't mind.
trade for you the account, your funded account.
Yeah, not my own money. Yeah, because I promised myself I'm not going to put you know, money unless it's funded account, because you know I can't raise that much, like 100K. But for funded account, I can, you know, you can get. Yeah, so if I can get somebody professional who can, you know, trade, knows in and out of Forex without blowing it. Yeah, even if it just give me profit for 2 months, 3 months as we are doing this, I don't mind. Yeah, I don't know if you have somebody in mind who can do that and we share profits. I don't know.
You see now, the same reason you have just told me, you went for a funded account because it is cheap to buy. Maybe you spend around $1,000, Cindy, and then you're given 100,000 to pass. Cindy funded account, which we are already managing. Most of my students are, and myself we are. Okay. So I'm asking, why would somebody trade for you the $100,000 account to split with you after you've split with that company? And they can also buy.
Because what did you say? I shouldn't trade for 3 months, yeah, until I'm good.
That's what I'm saying. Write an email to them. Ask them, did you go through the frequently asked questions of that company, Funded Next?
Yeah, about what
expiry.
No. I was just going through what I needed. I didn't check the expiry because I was not planning.
So do this. Just write them an email, if possible. Because what you don't want is that, number one, you haven't passed the account. You are still in stage 1.
Yeah.
So that means if you are still in stage 1, there's still a long way to go to pass that account. Okay? All is not yet lost. I would rather you keep it aside for later. Use it later for yourself and to grow yourself and to make money with it yourself. Yes. Because right now, these companies are not even allowing copy trading. I don't know if you are aware.
They allowed in the Funded Next. That's why I took Funded Next, because they're
allowing copy trading.
Yeah, copy trading, expert traders. Yeah, they're allowed.
Yes, good. But you have to notify them via email and tell them of that.
That's why I chose that specific account that allows that.
Yes.
Because there was an didn't allow.
I want to let you understand that they don't just allow any EA. Okay.
Yeah. I saw they don't allow EA. That is what is it called? High frequency.
Yeah, they're not HFTs and so on and so on. Yeah. So at the moment, I don't know what you're going to do is, I will send you a questionnaire. To answer whatever you need to learn, but with a disclaimer. I will give you your own custom course on what you want to learn, and I will make it tomorrow is when I will make it. So what we're going to do, because I don't want to teach you and you feel as if I am repeating stuff. Maybe you have learned a lot and I don't know. I don't know what extent you have. You don't know what is in my other lessons. And I don't know if that's what you want. But what I'm going to give you is, I just want you to tell me, what do you want to learn for the next 3 months? I'm going to give you a questionnaire. You tick what you want to learn in that list. Broken down. I'm going to prepare it right now and send it to you. With the disclaimer that since you have chosen the way you want me to train you, I will do my best. Doing my best, I always do. I never do anything half-heartedly. I will do it 100% just like I'm doing it right now. Okay? But with the time limit of the success, now it will be with you. Because number one, I don't know what you're doing behind the scenes. You have a lot I can sense you're doing. You have accounts, you have a personal, maybe $1,000 personal account. You have so many shiny objects which are pulling you to the market. Okay? And I don't know if you're going to get, you have other strategies which you are piecing together. I don't know. So I don't know if that is a fair deal. You make a choice. I teach you my style, or I give you a questionnaire to choose your style of teaching.
Because I thought we said we should continue your style.
No, I'm asking. I'm only asking because unajua Mariana, hii biashara mimi nimekaa na nimeifanya na nimeifunza kwa muda mrefu na ni kama hatuelewani. Na mimi siku hizi sipendi tukifanya kitu kama hatuelewani. I like being very specific.
One thing we need to understand is, personally, I'm somebody who don't just give up, right? And I've been learning, yeah, and I cannot unlearn what I've learned, right? And I was just being clear of what I felt about the lesson, and I was honest.
And I'm also honest. We are here, we are conversing, okay? And we are conversing so that we can get the best solution.
Yeah, and I told you my whole honesty. This is what I have. This is what I've learned. And this is the account I have. I don't have a personal account. I have a funded account. Because of this and this and this, I've been, straightforward.
So are you willing to give up some of these things for us to proceed? That is what I want to know.
Let's see. I will try and find somebody who can trade for me. But we can still continue as I find somebody who can do this for me.
Yeah. Because I want to avoid that load that you have on your back of, I have to make some money. No, you don't have to.
I have to. I'm a business person and
not in the Forex industry. Not right now.
All right.
Not in the Forex, not in the market right now.
Anyway, let's see how it goes. Yeah.
All right. So I'll send you the notes and
sure.
The video. Yeah. Then tomorrow same time.
So tomorrow we are not coming 15 minutes before. It's just today. It's still
between.
Tomorrow.
No, it's between. Today I just wanted us to go through the orientation of the first part of the class, and we have also extended because of the discussions more than maybe 30 minutes discussing all this. But now, since you have said you are going to allow the course to take its way, we're gonna go through what I have prepared. Okay. Whether you have gone through it or not. Okay. Because that is what I have set. And I have set it in a way that it has produced consistent, profitable traders. Okay, that is how I have set it. So I'm using a benchmark. Sijaribu kama, I'm not trying with you. Unaona, sijaribu ati na wewe ati kama hii inawaka ama haiwaka pana. These are notes I have done and reviewed over time. Okay, so I'm gonna do what I'm gonna present to you. I'm gonna answer questions where you are stuck. I'm gonna give you assignments. You're going to send them. Okay, I'm going to look into them. I'm going to mark them and revert in your email. Email will be our main form of communication. I'll be sending it na kuandikia kwa WhatsApp. I have sent you an email. The link will be in the email always.
All right.
Yes, so that we are able to follow up with the course. I told you, I want to turn you into a good trader. And I know the struggles which traders are going through. Even 90% are failing. Why are they failing, Mariana? Why is 90% failing? Why? You're coming to an industry where the odds are against you by a much. What if I was telling you it will take you 3 years to succeed in Forex? Will you still do it?
It depends. If I can still trade and still learn. Yeah.
Yes, and still, no, stop putting the clouds of trading and still learning. It doesn't work. You cannot have your cake and eat it. You still have that aspect of, I have to be trading and then learn. No. Ninaomba tu Mungu sana. Hata saizi I'm in prayer and I'm asking God, ebu patia Mariana peace, a trust process. Mpe peace, a trust process. Awache kutaka sana kutengeneza hii pesa yenye inakaa iko karibu lakini iko mbali. Iko mbali. Hii pesa ya Forex Mariana, iko mbali.
Me, it's for my business and my partners, yeah. And I'm the one who made the loss, so I need to, recover from that. And some investors are with because their time ilifika, and it was a pressure for me. These 3 months have not been easy.
I know they are hard.
But yeah, very hard because having to investors who want to withdraw money that is not there, or it's still in the market, with some loss, with some still with other clients. It's a hard thing. Yeah, and I'm sad that I don't like to give excuses. I like to talk the facts. Yeah. Even that's why I told you I'm not here to waste your time, or then when I sent you that message that I'm not going to take up the class,
yes,
because of the loss, it's because I don't like to waste somebody's time or somebody to think that I'm wasting their time. Yeah, I like to do business straight things. Yeah, straight deals. Yeah.
Okay.
Yeah. So it's kind of hard trying to balance my business, teaching, and Forex because I really need it. I really need it. Yeah.
Yeah, I understand when it comes to people putting funds, or you're a deposit-taking finance institution.
Yeah, and
sometimes
it's yeah.
No, I do
trust.
understand, and I told you, I had the story you told me, and I told you I really understand. But then I'm trying to save you from yourself. Don't allow yourself to destroy a very good process.
Because 3 months is quite a lot.
No, it's not a lot. Not a lot.
No, I mean, depending on how clients I've scheduled them, the ones who are removing the interest that I'm paying them monthly, because I do pay them monthly. Yeah. I still have big investors who want big cash out. So yeah.
Let me ask you a question, Maria.
I wish I knew Forex, but I was not interested. I wish I was interested by then. Maybe, then when I was comfortable, my life was kind of smooth, because it will not be this pressure. Yeah. But, praying to God that He gives me another source of income and to add on Forex. Yeah.
Juza kile mimi najua ni ati unaona ukiapproach market venye uko na hizo pressure, Mariana, you'll end up losing a lot of money. I can see disaster. Yeah. I'm not a professor of doom, but even in my own experience, when I'm experiencing any emotional or pressures that are financial, I don't even approach this market, because I know it has a way of ni kama inanukianga fear na stress. Like it knows how to take money. It knows how to take money.
Yeah.
Yeah. So no matter nakwambia, usijieke at a worse position than you are right now. When I'm telling you, Mariana, stay off from the charts, I'm just telling you, Mariana, trust God in the process of helping you manage that situation as you learn flawlessly, bila stress.
Amen.
Bila
That's
stress.
what I'm also. I wish
learn bila stress. Yes, kuna hizo pressures ziko kando kando. Hizo amini Mungu ajaribu kumanage. Na unafanya vitu zingine zenye sio trading. Si kwani si trading, the reason nikuuliza ni trading inakupatia pesa yako yote? I don't think so. It's not the one. Yeah. So kama ikupatii pesa yako yote, why are you giving it so much weight on your back kuibeba? Usiibebe. Allow nikufunze from kindergarten, nikupeleke hivyo, nikuoneshe support and resistance, nikuoneshe trend lines, nikuoneshe vitu, nikuoneshe venye zitumikanga, venye hazitumikangi, venye watu wanachapangwa kwa market, the psychology of the market trend, all these things ni mingi. Na nitakufunza zote.
So you say after 3 months I'll be able to trade.
Now, after 3 months, nitakuwa nimekupatia all the resources necessary, si ndio? Na unajua kuzitumia kwa market. Hasa ni practice. Now, wewe utachoose kama uta practice na hizo live accounts ama utaingia kwa demo. Are you getting my point? You're the one who will decide, am I going to practice all I've been taught by Keka in the live market to pass a funded account, or am I going to practice it huko? Mr. Kuforce ufanye after 3 months. But for the next 3 months, tulia tu. Usikue mgumu. Usikue na roho ngumu. Tulia tu. Mimi kama kuna mtu asai kuambia hivi, asai kuongelesha hivi, kuongelesha masaa mingi kujaribu kuconvince, let me be the first one to convince you. To just let your guard down kidogo. Mimi siko hapa kuenjoy ama kuwestia time, Mariana. I'm not here to. Unaona mimi I'm very punctual. I sent you the email way before. When I tell you it's tomorrow, it's tomorrow. If I'm not going to make it tomorrow, I'll tell you a day prior. Because I have a calendar, because I work with plan. Unless ni ugonjwa ama kitu yenye happen. Ama kukue na earthquake yenye stima zitapotea Kenya mzima. But nimejicommit. Okay?
Okay.
Yes, nimejicommit kukufunza. Nisha decide, kichwa yangu ishaelewa. Najua na kufunza wewe na niko na wengine wawili. So every single day, asubuhi niko na mmoja, afternoon ni Mariana, jioni niko na mwingine mmoja. So I have 3 students at the moment. Na siwezi chukua zaidi yao unless sasa ni give up trading, one session of trading. London ama New York AM ama New York PM, unless I give up one of those. And I'm not ready to give up any of those. That's why I am here telling you, take the hii kidogo na mingi zote utazielewa kule mbele, and I'll make sure you uzielewe so well that ukiangalia market you know what you're looking for. Kazi yangu ni kubadilisha venye unaangalia chart na kenye unaona na ni patterns gani unafaa kutafuta. So are you going to give up? Na convince you attend vitu is for 3 months peke yake.
Yeah.
3 months peke yake.
All right.
Ni sawa? Do you have a deal?
Yeah, all right.
And you're going to, I pray that you're going to hold the end of your bargain.
Amen. I'm praying so too.
I'm praying. Okay? And amidst the pressures that are there, I'm really sorry about them. I pray that God gives you the grace to manage them in a better way than even what you're planning to manage them. Okay? But don't allow the Forex to come in as a way to kuinja we mwenyewe. Sawa sawa.
Let me ask you, you also use funded account, eh?
Yes.
Which one?
Alpha
Which company?
Capital.
I've seen
Yes.
that.
My top 2 ni FTMO na Alpha Capital. Yes.
And what is it called? So I had this conflict about funded accounts.
Yes.
If you buy a funded account, maybe 200K or maybe 100K.
Yes.
And you make like 50%. Are they going to pay you? Are they crooks?
I will recommend not making 50%. Yes.
They're crooks, eh?
Ukitaka, let me tell you, because they are crooks and you know they are crooks, just play the game we normally play with the students we normally withdraw from these accounts. You know what you normally do? Make the minimum amount that is required to withdraw. Maybe you have 100,000 accounts, ndio? The 100,000 atakutengeneza 100,000 and 1,000, hiyo ni sawa. See it's profit.
Yeah, it's profit, yeah.
Si withdraw, kwa nini unataka ikue mingi ati ndio withdraw? Si bado uko na capital ya 100,000. Is your 100,000 capital changing?
No, but do you withdraw every day, but it's monthly?
Ni sawa, ni monthly ama bi monthly ama whichever, ama weekly, depending on the frequency which you are withdrawing. If you withdraw sana ama ukikuwa pro anakupatia maybe after 7 days, after a week.
Ah, that's nice.
Unaona? So depending on the frequency of withdrawing. So kama unaweza patia hiyo pesa na 7 days, si utengeneze hiyo ya hiyo wiki unatoa. Kwani ushinde ukingojea ifike wherever.
Okay.
Yeah, you are interested in money, not in shining with the account.
No, me actually, I'm more interested in, you know me, I'm more interested
In money,
like
yes. In money.
I'm very interested in money, and
Yeah.
I don't know, I am.
So funded
Yeah.
account is kupea stress hizo vitu. Hizo vitu ukiapproach na pressure, hizo vitu ni rahisi kuanguka. Ni rahisi hizo rules. Sio rahisi venye unafikiria. Hizo drawdowns, sijui 5% drawdown a day. We are aware of all these things. They are not easy.
Okay.
Ukiingia drawdown kwanza itakupatia stress. Utaamini. Kama uko kwa drawdown, na uipeleke huko juu, it will give you so much stress, utaamini. Na utakuwa unaipeleka drawdown kila siku na $1,000 leo inakuliwa, kesho 1,000, another day 1,000, unapata uko negative 3,000, uko negative 3%, unakuwa na stress ingine uamini.
Yeah. So you told me you can't recommend anyone.
Hapana. Mimi hata si recommend. Hata mimi mwenyewe umeona nikikwambia, si umeniambia kuna investors. Umesikia nikikwambia nikutradie. Do you know why? Sasa kwa sababu siwezi. Ni kwa sababu nimerealize na hata kufanya kuna mtu ananipea account bila mimi kushinda akinipigia simu kuniambia ati anataka pesa zake. Why do you want to give nimekuwa huko wa Mariana. Mimi nimepatiwa accounts na tumewithdraw na investor. Niwarudishie pesa yao. Hata sikuwa nachukua pesa yao mimi. Do you know what I used to do? I used to open Pepperstone accounts for them. Unajua Pepperstone?
Yeah.
I used to open Pepperstone accounts for those rich guys. And I used to tell them, wewe weka 10,000 minimum ilikuwa 10,000 USD. And then we are gonna split 50-50. Wanafanyanga 50-50 ama wanafanyanga ngapi?
For us it's different because it was not about crypto or Forex.
Yeah.
It's just a general investment where we give diaspora loan and all that, and then we invest the money to other investments, and then we get a return. Yeah.
So we used to do 50-50. But when this funded accounts came, and I had raised enough capital for my account, I told them, that's it. I've made you money, so you go to your Pepperstone and withdraw your money from Pepperstone. And I withdrew the money, it went to their bank, to their equity banks and cooperative banks. No one went through a loss. And I left that stress. Because shida ilikuwa, mtu akipata kashida, anakupigia. Unataka pesa. Ama, anakumbuka kuna ile 10,000 kwa account. Wewe ulikuwa unafikiria atakaa nayo for the next 6 months, ndio?
Yeah.
Yeah, in 3 months inafika anakuambia I need emergency funds mbio. So you initiate a withdrawal for them. So the capital is no longer 10,000. It's maybe 5,000 USD. So dynamics change. Using the same energy. So
okay.
I said I don't want that kind of stress. It doesn't give me my freedom as a trader.
Yeah.
I'd rather teach someone what I know and the information and create another trader somewhere else than keep investing, and people are here giving us money to trade.
Yeah. All right.
So that is it. Na kitu ingine unafaa kurealize na siku hizi funded accounts zinaangalia majina za zile accounts zimelinkiwa. Unajua hivyo?
How?
Let me give you an example. Let's say I have Kevin Karanja. So si niko na account yangu ya maybe Alpha. Na wewe unataka kunipatia account yako ya funded next.
Oh, like they check
na unataka ni link kwa yangu ndio nikitengeneza profits yako inatengeneza profits. Wanaangalia.
Okay, see.
Yes, I get. So even if I wanted to plug in my account to your account for you to make the profits I am making, they will not pay you out because it is not being traded by the trader who bought the account. Hizi tricks zote wamezijua. Hata kuna mtu alikuwa anasema acha nikubaie, there's someone who knows how to trade, I buy an account, umwambie shika unitradie. It used to happen. Yeah, right now they have very tight rules. So, kwa nini ujiongezee probability ya kukosa kulipwa? And why do I take up the risk? Hata mimi mwenyewe. I can't take that risk. I just keep trading my account.
All right. I don't know. I'll try and check the minimum days.
Check the minimum days and write an email to them also and request them.
But they have said end date unlimited. I don't know.
Kama ni unlimited, basi hakuna time limit.
Yeah.
That's fine. So what we do? Let's meet tomorrow.
Okay, sure.
I hope you're not going to is there anything else you want us to discuss here and now? Because tukianza kesho ni marathon. Sasa ni mpaka end of the week, next week but one. Continuous.
I wish we had even 3 hours to study. I'll be very happy.
I wish I could do that. No, I wish I could do that.
Yeah. Okay.
But hata saizi naona ni 3:52, so it's 8:42 in New York. Ishaingia kwa time yangu ya kutrade. Okay, but sure. Just as a bonus of today's class, tutapitia tu kitu moja tu hapa, just for bonus.
Yeah. All right. Thank you.
Just for bonus purposes, I will show you what asset do you want to look into? What are you looking into?
Gold. Definitely. I love gold. Gold is
you can only depend on gold. Lakini ni sawa.
It's the one that took my money, so I need to take money from it again.
Okay. Yeah? Okay, no problem. So
it took my money, so I need to take my money from it.
No problem. Let's look at it.
So I saw you trade a very huge lot. Is 10?
It depends on what I am trading and what risk I am using at that specific moment. Sometimes I am risk averse, sometimes I am risky. But all of that is informed by what the market is telling me and the setups it is creating for me. Okay? Their setups I will not risk more than 0.5%, and their setups I'm going to risk 1%. Other setups I'm going to risk 10%. So depending on what kind of a setup I see, I will judge and act accordingly.
Okay.
Yeah. So I want to do this. I want to, but we can continue. It will be one long video. No problem.
No problem. Yeah, I'm good with it.
Okay. So we look at gold. So what you see gold is we've been having this uptrend. Okay. Yeah, we have higher highs. We have this is an uptrend. Okay, we have this move
before
to the upside. Okay, that's an uptrend. Once you have an uptrend, what do we see? We see that price had a certain resistance up here and a support down here. Okay, and then price moved up. So we can see that in the line chart. When you go to the candlestick chart, it gives us more information on what the 12-month time frame was doing. So we can see that the market came lower, took out some liquidity down here. Then we came up here, consolidated around this region, made an impulsive move up, a corrective move down into an imbalance right here. Then we created equal highs, and the next year's candlestick ran the open and the close, and then we took out these highs and have been moving on an upward trend ever since. So with that, what I normally do is that I will mark up some of these regions where we have this yearly high, but I wouldn't even mark this right now. I would mark in this market from this region, marking up to see these highs right here. So we have this previous yearly high. Then I do have this region right here, which is the previous yearly low.
And you have no idea where she could be. No idea. Have you got any of them?
Then with that, I want to ask myself, what do I see the market did? I can see the market opened, went lower through the year, and then we have been going higher. And considering today is the 10th of June, it means June is in the early inceptions of the monthly candlestick. So I'm assuming that this moves downward might be a pullback in the lower time frame or something like that. The other area that I normally mark in is I will mark in my all-time high, because as I'm considering looking at the chart, I can see that that's an all-time high of the chart. I normally call it the ATH, is the all-time high. I don't know if this chart is visible, or do you like a black one or a gray one?
Black one is good, but it's still good. I can see it anyway.
Let me give you the black one. Is it better that way?
Yeah, it's good.
Good. So all these settings are there for you to choose from. So we have the previous yearly high, previous yearly low. We have the all-time high up there. So we can see that that's where price has been at the maximum at around 24.50, almost at 25.
Let me ask, how did you know this is the previous year low? But this is a 12 months chart, right?
Yes.
So this is a chart for 12 months. So this imeandika PYL.
Yes, previous yearly low.
Is the how do you know that? Because I think the low is down here. Down. Ama?
Hizi vitu nitakufunza huko ndani ya course kwa sababu ninaona bado uko way ahead.
Thinking, if it's a 12 month, that is 1 year, right?
Yes. So hii candlestick hapa ni ya 20 what?
20, 12 months. Okay, I get now. The candle itself is a 12 month. Okay. I thought the whole chart.
So kama hii ni 12
so the whole
months.
Chart, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 years.
Yes. So whatever price action we have here, all these years from 2012. So every candle here in 2012, 2013, 2014, 2015, 2016, all that. Okay?
Yeah,
yes. So that's what we normally check. So I can see we have the all-time high up here, and we have this year's low here. Am I gonna mark in this year's lows? Not necessarily. Okay, I don't really mark that, but there's something I'm gonna mark in. I'm gonna mark in this resistance level here. Okay, I'm not gonna mark it with a line. I'm gonna mark it with a zone. This is a resistance zone here. So I mark in my yearly resistance zone. There. So once I have my yearly resistance zone, I can see that this is an area where price tapped into, came back down, and then started springing higher. Now, where is price? Price is somewhere along this place. So we haven't closed the year, so the market is still moving on. So this candlestick can come lower, take out these lows, can go higher to the moon. It doesn't matter. We just want to see what the market is doing. And in the year, we can see that. Then I go to the quarterly time frame. What do I see in the quarterly time frame? In the quarterly time frame, I can see that this market was in a consolidation. So this consolidation, I can see we have a range low right here. But price is quite far, and that is fine. What do I see? I can see some push to the downside, taking out some liquidity right in here. Then market came, created some relative equal highs, and then we ran them. So this was a higher high, higher low, then a higher high. So this is a swing point that I'm anticipating price is going to either pull back to take the internal range liquidity or go higher and take out the external range
liquidity. So what I'm going to mark in is a previous quarterly high. So I will mark in that level there as a previous quarterly high. Previous quarterly high. So that is what I see. Okay. So once I have that marked out right there, I want to look into this area here. And in this area, I can see this is a fair value gap that is being formed or an imbalance. So considering this is a 3 month, we know that we have 4 quarters. This candlestick will close very soon. So it's going to close in the end of this month. In June, we will have this quarterly candlestick close. We can see the market opened, came lower just to close in this small new month opening gap. I want to open the range there. And you can see we have a gap here. We normally call this gap a new month opening gap. And these gaps are formed when prices opened are not the same as prices closed. So you have a new quarterly open gap there. Okay. So with that, we can continue with the analysis. I can say that previous yearly high, and we have a gap. And you can see price has been pushed lower. What do? We can see that this is an uptrend. Going to the line chart, clearly it's an uptrend. Higher high, higher low, higher high. Then you go to monthly. Monthly, what's the trend? The trend has been higher, has been making higher highs and higher lows. So meaning it's also an uptrend. We might use a trend line, or by eyeballing, we can see this market is just consistently going higher. When you go to the candlesticks, what do I see? I can see some type of rejection in an area where you don't have price action to the left. Now, this is where now we make decisions, because now we can see price has gone up there, been rejected, gone again, rejected, opened a high again, and rejected. So we have a swing high, a lower high, a higher high, a lower low. This to me is a swing low that might now give me permission to be looking for shorts in this market short term. But long term, I can see we have higher high, higher low, higher high, higher low, higher high. So this is my monthly validation level, and this is a swing. So if I am to mark that level, I would mark it as my monthly validation level. So I wouldn't want to see any break of structure here, because if I see break of structure right here in the monthly, then my next target will be this low and this low. So what I do is I notice I have 2 imbalances, one in the premium level, one in the discount level. So I will mark in this level here as a monthly imbalance in form of a fair value gap. I will also mark in this one here as an imbalance there. Monthly imbalance there. Okay. So once I have these 2 levels, I will mark in from this low to that high and find a discount level where price might decide to turn from. And the area I see and I realize is that area there. So what I will do is that I will make my monthly range DRT. So this is my monthly DRT, 50%. There. So once I have that, I will remove that projection of the FIBO. And I can see that price can be allowed to come into these discount levels before proceeding higher. I can see my all-time highs. Price is not interested to go back there. We might see price coming lower. The other thing that I will mark in is my previous monthly high and low. So I have my previous monthly high, which is here inside the all-time high. And I have my previous monthly low. There. So once I have that, I can see the current month. How did we open? We opened high, we came lower. Now I can see the draw on liquidity. Now, one thing I want to mark in this is this previous monthly open here, because I can see there was a type of reaction around that area. Okay. Then with that, I can see I have the weekly down here. But before that, let me align the range here. There, that's fine. Okay. So we have that swing high. We have the previous monthly open and so on and so forth. Is there anything else I want to mark in? No, I go to the weekly. So what do I see in the weekly time frame? I can see that in the weekly time frame, we are in a consolidation. Okay. I can see this is a consolidation forming. Many traders don't know when to identify the market is in a consolidation. So what I see here is I can see a range, a weekly range high. And I do have a weekly range low down here. So I can see price is confined within this consolidation. What does this mean? That as much as I'd want to see price going lower, down to these levels or to that order block or to these imbalances or towards the previous yearly high, price can also choose to confine itself longer term in this consolidation and move in that fashion. So I'm aware of those three things that the market can do. So what do I do in that regard? I ask myself, this week, what has the market really done? We can see last week we had that bearish candle to the downside, that bearish candle, this bearish candle, not breaking these lows. We can see in the weekly range. So meaning what we have here is a visible new week opening gap. So what I mark here is a new week opening gap there. And once I have that new week opening gap there, now I can identify that price went above, created this swing high, came lower, created relative equal lows. So we took out that high, but we haven't broken this low. So we have a higher high, a higher low, a higher high, and equal lows. So I would anticipate that price would want to get into these regions first before going anywhere. So whatever price is doing right now going higher, to me, might be just as a pullback in the beginning of the week, then we continue lower. So what I see, but I want to also observe what happens in this area. So what I do, I will mark the previous weekly high, which is that last week's high. Then I will mark in previous weekly low, previous weekly low there. which is also the previous monthly open. We never tapped into it. Then I'm gonna mark in the previous weekly open. And I will mark the previous weekly close. So once I have those two regions marked out, or those regions marked out, I'm also going to mark in the consequent encroachment of the weekly week. We call it the C of the weekly week. We have that high, sorry. We have this high and the price open is going to give us the 50% mark, which is normally the consequent encroachment of the daily week. That's the consequent encroachment. So once I have those areas, now I can continue and proceed on to the daily to tell me what price is doing. So I go to the daily and I will look at the daily and I can clearly see, yes, we are in a consolidation, but not just are we in a consolidation, it's a consolidation that is moving. Why? Because daily shows me a few trends. Why? I go to the line chart. What do I see? I can see an uptrend. I can see a downtrend. I can see an uptrend. I can see a downtrend. This means that this market is in a consolidative cycle in the weekly, but in the lower time frame, it is trending. So we have trends within consolidations and trends within trends. Okay, so I want to see if in this downtrend of the daily, I'm gonna find a lower time frame narrative for the downtrend. So what do? Go back to the candlestick chart. I can see that this market had this impulsive leg to the downside, breaking a lot of structures and changing in price delivery. So I can see here we have a daily order block. I can also see now that we have another daily order block right here. We had price take out liquidity entering imbalances, creating an imbalance, and I can see this daily order block. So what do? I will mark in the regions that can give me high probability setups. This is one of the regions that will give me a high probability setup. That is a daily order block. It's a bearish order block. That's why I call it a daily OB minus bearish order block there. Now, what else am I going to mark in? I'm going to mark in this new day opening gap, which is within the new week opening gap. You have a new day opening gap there. What else do I see? I can see the previous daily high and the previous daily low. That is actually what I see. So I have the previous daily high. I have the previous daily low. There. And I also will mark in the daily DRT. From that high to this low, I want to mark where the premium price point is. That's a daily DRT 50% there. So I can clearly see what I am trading. So what do I see? I can see impulsiveness to the downside, a lot of liquidity resting right below price where we haven't run the lows. I will mark them there. Previous monthly open. We have the previous monthly low down there. We have the monthly fair value gap there, and we have an opening gap of the quarterly right down there. So, but right now, what do I see? Price opened, went lower, then is running higher. Are there areas that I need to mark up? Yes, I have this area here, which is a type of as a resistance there. So I will take that zone. I will mark in that area. I'll pull it a bit across. I'll go back to the candlesticks and I will mark in that area as a daily support and resistance zone. There. So the reason why I'm marking that area as a daily support and resistance zone is because I want to see what price does when it gets to an area which rejected price to the upside. So once I have all that, I will now continue to the lower time frame. Do I see anything else that price might draw to? Yes, I can see price is drawing to some levels up here. So I would be advised to keep on looking for levels to draw to higher in the lower time frame. So once I go to 4 hour, what do I see? 4 hour, I can see price has turned to the upside. So if it is turned to the upside, I can see price opened lower, taking out some liquidities, running higher. I'm gonna reduce these previous weekly lows just to notice them when you go to lower time frame. Right there, I have that previous weekly low point, previous weekly open there, and we have the daily order block. I have the previous weekly high above that region there. And I do have the weekly consequent encroachment of the weekly wick, which is aligning with the daily new day opening gap. And then I have another new week opening gap above price. So this price might choose to run higher, but we are going to see that. But now what I want to mark is an imbalance in the 4 hour time frame. I have this imbalance there. So that imbalance is the 4 hour fair value gap there. So this shows me that price might want to come into that region. We have the daily SNR zone here, and we have the 4 hour fair value gap right there. So what do I see there? I want to mark in some regions. I will mark in that high as a 4 hour buy side liquidity. I will also mark in this other price here as a 4 hour buy side liquidity, where price might draw to next into the daily resistance zone. Okay, I can see price right now is actually has turned and gives me some regions to go higher. I can see that we had a fair value gap here, which we never actually respected. So we invert this into a 4 hour inversion fair value gap. Okay, so we have that 4 hour IFVG, which price might use as support to continue higher. So with that, I can see this is our previous 4 hour candle. So what I do, mark in down here, I want to mark in this order block that took some liquidity. So I can see that I have that region there. We took out some liquidity. It's a bullish order block right there. So I can see price came lower, then went higher. So what do I do after this? I go to my 1 hour time frame and I want to see what did we do before price went higher. What we did is we had this consolidation. So this is a consolidation cycle, which is called I will call it a 1 hour range. So we had price ranging for 1 hour. So we had our range high and low, 1 hour range high and low there. Then what did we have down here? We had this sell side of the range right there. So I can see that is actually what we've been having there. So this for me is a 1 hour range, high, low. So with that, I can see that price came lower, accumulated, came one, stabbed this liquidity down there, left some equal lows. So what we have here is 1 hour sell side liquidity that price might want to come and expunge later. This is 1 hour sell side liquidity down there. What else do I see here? I can see an imbalance. So with this imbalance, I can see I have that and that in there. That's a 1 hour imbalance in price, overlapping with a 4 hour in price and in a top of the range. So what do I see? I will come back here and I will mark some levels. I will mark in this 1 hour buy side liquidity. I will also mark in 1 hour sell side liquidity. Now I can see I'm within this 1 hour range in the lower time frame. So with that 1 hour fair value gap overlapping that, I'd want to see what price does in this range in there after running that high. Do I see any price action pattern that might change my narrative? No, I only have this area here and above within the 4 hour fair value gap. I don't see anything much, so I will take in that high, mark it there as a 1 hour buy side liquidity. I will also mark in this area here having so many buy side liquidities as my next draw on liquidity. I have that region there. I have that region there. And I have this region here as some liquidity areas there. Okay, so this is a good draw on liquidity to the upside. Let me edit them. So one thing now we're going to do is now go to the lower time frame, 15-minute time frame, just to check what the market is actually doing. So what do I see? I can see the range high and the range low. Okay, I can see clearly we had this accumulation here from these levels of the market where price had accumulated. Then we can see that price came lower, took out some lows, went higher, created a higher high, higher high, higher low. So in 15 minutes, what is a trend? I can clearly see that the trend in 15 minutes is an uptrend. So what will I be looking for? I'm looking for higher prices. Yes, long term I am lower, but when I look at short term, I can be bullish. Why can I be bullish? I can be bullish because it will allow the higher time frame to retrace into a premium price level before we continue lower. And another thing is that we are within a weekly range, meaning price can choose to go inside the range before we go any lower. So that is what I see. So what do I do once I see that? I'm gonna mark in these levels to be a bit closer to price in there. I will have that one there, and I will have that one there just to see what price is. I want us to project where price is going to next. Then I can see that I have a 15-minute order block there. As a 15-minute order block. Then what I'm going to do is we also have this fair value gap there below that low as a form of an imbalance. So once I have those regions there, now I can mark in this small range that I see here. this is a range here, a range in price. Why? You can see rejection, rejection. So I have that top of the range there, and I will show you where these ranges are. Okay, I have that range. That's a 15-minute range high. And I have a 15-minute range low. So what do I do once I have those two areas? I will now go to the 5-minute time frame just to see, just a moment, just to see what price is actually doing and if it is confirming for me what I want to see. So I go to 5-minute time frame. Now I have decided the chart from the highest time frame, and I can see we're in a consolidation. So what is this consolidation telling me? This consolidation is telling me that this market, yes, is in an uptrend, but in a very choppy state. So one thing I'd want to see is that since we are going higher, I would like to see some patterns happen around this area. So I will go to 15-minute again. I will confirm. What do I see? So I want to see what will happen once we run this high again. So I will mark this as my 15-minute high. And I can look at the time. We can see it's 12:13. So this candlestick is almost closing. So I want to see what that buy side does and what this sell side does there. So once I have those regions, I will go to 5-minute, see what price is doing. Can see we are running that high. Then I go to 3 minutes. I want to see what price does. I can see price looks like it is going higher. So I'm looking at price is quite compressed in that region. So we have the 1 hour, 4 hour buy side run. I can see price seemingly wants to go higher, but there are things that it has to give me before I buy this market. So what do I see? I go to 1 minute. In now 1 minute, I am seeing we are in another small consolidative cycle in the larger consolidating cycle. Okay, so I look into that. I can see we have a lot of liquidity down here and a lot of liquidity resting up here. So above this 1 hour buy side, you can see the liquidity resting above there. You can also see this liquidity resting down here. Okay, then we have this liquidity resting down here. So what I normally do is that I wait patiently. Just a moment. I have sell side liquidity there. And I have this sell side liquidity there. And I also have this, which is some buy side liquidity. Right there. So my job now is to wait patiently for the market to give me a pattern that I can identify to buy or to sell. Why would I be selling? I'd be selling because I have areas here which price needs to come back to before we continue higher. Okay, now once price does something like this and I can see a displacement, I will wait for it to break this area here. I will look at the time. It is 9:20. I can see that this candlestick 9:20, meaning we have 35 seconds. So this market with this displacement, I can see we took out that high and we have these lows to cover. So if I was to sell this market, I'd wait to see this area, this candlestick close strongly. And if it closes strongly in this range, I can see we're on top of the range. I can see we have the bottom of the range right here. So that's 7, 6, 5, 4, 3, 2, 1. So what happens is In a scenario like here, when you see price has rejected strongly, you have to wait some more because price is not giving in the sell. You want to see very major candlesticks form because we have some liquidity resting above this area right here. And this liquidity resting above, it might be taken out before now we see the true move. So what we do is that we just become very, very patient. So anyway, that is the analysis from the 12-month to the 1-minute time frame. And as I can see, we are in a consolidative market range there. This is a place where traders lose most of their money. So I'm very cautious when I'm entering such, and I choose to either enter when I see us being faked out, market coming back and targeting these lows down here, or the market coming here, looking for some areas to see if the market will continue lower to the downside or the market will continue higher. So I don't know if you have any question, but that is the top-down analysis.
Okay, so we should wait first for it to move from.
No, you wait for it to give you the signatures which you know.
Okay.
Because if you ask me what the market is doing here, I do not know. I don't see anything here that can convince me to engage this market. Now, what I'm waiting to see is I want it to align. It's 9:22. 9:22 in the next 8 minutes, I am aware that the New York Stock Exchange is opening. Okay, so if the New York Stock Exchange is opening, I will make my decisions in regards to when that opens. Okay, now there are patterns which we look at. This market is a clean fake out to the upside because it has to do this to induce buyers to sell. People who don't know what the market is doing, they are buying, they are excited when they see profits, they are sad when they see losses because they don't know how to manage a lot of things. So this is what, there's something I want to see here happen here in this consolidation for me to make a decision to sell or to buy. Because I can also make a decision to buy when I see something because I also have another target here. Now, do you see how I normally mark up my targets? Now I know what I am here. If the market runs here and shows me, I can only buy here, put my stop loss here, target higher. If not so, I know that these blue lines that I have put, if the market does something to the upside, I can choose to sell the market to this order block down here, where we had a fake out to the downside, the market went higher. This is an area of interest where the market may go higher. Why? Because even on the higher time frame, we have a 4-hour inversion fair value gap on the higher time frame, which is coinciding with my lower time frame narrative to buy. So right now, short term, long term is a sell. Intermediate term is a buy, but in the lower scalping sense, I would like to see the market sell to the downside and collect all these stop losses that are here. What you see is structure. What I see is money. I can see a lot of dollar signs down there. So what we learn is we learn how to trade like novice traders. Then we want to see what the market does here. That's an area that I'm interested in. And I also want to see what the market does here. But inside here, I do not care. I don't care. It can do whatever it wants to do. But I want to see what the market does here and here. If not so, there is this level that we've created right now. I want to see how we treat this level. That's what I want to see. Because you can see this market is very choppy. What it is doing, it is inducing buyers. Did you see how it tried to run higher? Here. Yeah? Mariana, are you there?
Oh, sorry, I was even talking when the mic is off. Yeah, I saw that.
Yeah. So what we have here is a volume imbalance. You can see price. I want to see a very good closure to the downside and an imbalance. So I want to see 3, 2, 1. 0. That's it. That one has closed. So the next candlestick, if this one closed like this, you want to see. You don't want to see this candlestick close above. I don't want to see the candle close below this region to make a decision. But then in ranges, why I don't like trading ranges is because even if you'd have entered your entry somewhere here where price is, then it means your stop loss would be above this area right in here if that's what you are to sell, maybe around 41 pips around there, so that if you are wicked out, you know that's the case. And what will you be targeting? You'd be targeting a small 1:1 risk to reward ratio. Now, many traders don't understand why you're making this decision. You make this decision because there are levels here that this market can stop you out. So that's why I don't consider this a conducive selling. What I'd want to do is I'd want to buy with the intermediate term, because I don't know if this market is going to run these lows here and finalize the market, or you're going to come back to these lows to tap into this 4-hour order block. But I have these regions here to mark out. So whatever is inside this range is a very risky RR, or risk to reward ratio. Now, why would I be seeking lower prices at the moment? Because I can see the pattern in price. Can I be wrong? Of course, I'm wrong sometimes. But now I can see that price came out, took this high one more time. Then we went lower, created a displacement lower, and closed below this area here. So once we did that, I can mark in this as an order block or a change in delivery of price here, a 4321 OB. Okay, so once I have that, what else do I have? I can see prices continuing lower. So this series of candlestick up to where? I will just take my Fibo and I will do something called a standard deviation trajectory, that I want to see that price come to -2.5. So if the market runs to -2.5, this is where I'm going to take my partials. Why? Because -2.5 aligns with my 1-hour sell side liquidity inside a fair value gap or an imbalance of higher time frame. Okay? Sawa Mariana?
Yes.
Ni ndarĩkia.
Yeah.
Nimeongea sana, hata sauti yangu imeisha. That's why naona siwezi kuwa naongea sana.
Pole.
But I hope umeona venye this is how I normally take my judging. Have you seen how slow of a process it is?
Yeah.
Simona sio mbio.
Simbio, but if you have this kind of setup, do you need to do the same setup tomorrow? So you just save it.
No, I do the same setup every single session.
No, I mean,
yes.
If you've revealed the, what do you trade most? Let's say
NAS 100,
yeah.
US 30.
So
yes.
the setup is there, right? About the previous year, previous month, right?
Nope,
so
I
you
do
just
not
go
leave
weekly.
them there. Nope, I don't leave them there. I do fresh analysis every single session.
Why? But it's the same thing.
When you are a bit experienced in this game, you're gonna know why.
Yeah, I'm just praying I don't give up.
Right now, if you ask why, and I have done it, I used to do it. I used to do analysis during the weekend. And I come back on Monday and I think the same thing I left on Saturday was the same thing. Okay. And then you realize that you missed some very important details. Did you realize the levels I'm drawing? Can you see I identified that we took out liquidity here and told you that this market, if it breaks below this level, the next region it can go after taking out the buy side liquidity is this sell side liquidity here. So this one is normally a guarantee. Are you getting me? This small move is a guarantee. Anything else is a bonus. Okay? This is normally a guarantee. Running this 1 hour low is a guarantee. That is why when I mark in 1:1, I will take out my range, I will take out that area, I will move out there, and I will mark in my 50% RR. Where am I getting 50% of my returns? I'm not in this market to be right.
I am in this market to make money. Okay? Once I mark in that region there, I will see that was my 50% RR. So if that region is achieved, I have made money. And you will always, most often than not, notice that when the market runs that 1 hour low, can you see what is happening right now?
Yeah, it's fine.
Now, already I will have taken all my partials, 80% of the trade off before my ultimate target down here. But when you give a trade and the market goes back in, oh, you're this is a substantial move in the market, a substantial move. Tell me the last time you are accurate here to here, just a small move accurate to areas where I told you I'm watching. There is my eye. This blue line is what I want the market to come in as my ultimate TP. Just that. I risked $1,000, you risk $1,000 to make $1,000, and that's it. Okay?
Okay.
Yeah.
All right.
Yeah. So I hope